Hello, good afternoon. Welcome to another ES Futures Trading video stream. Today is Sunday, August 27th. It is 4:34, 4:35 Eastern Time in the US. Let's do a quick market update. For the week that is coming, for the upcoming week. Now, the first thing that we always try to do is take a look. Let's take a look at the bigger picture. This is the ES, this is the market. You have the monthly time frame here, weekly time frame, and daily time frame over here. In the monthly time frame, there is change in the month. Something has changed in the bigger time frame. We have this rally that started back in October maybe, which gave us a 13-month range. I still have a range here. This is the high. The lower range is down here. But what I'm more focused now is the higher range. This is too far from the low already today. And the market has been trading higher for 5 months. 1, 2, 3, 4, 5 months. And that trend has ended. There's change. Something has changed in the market. Market doesn't work on. Don't go from trend to trend. Usually there is something in between, right? Usually there's a range before or between trends. It can be from trending higher to trending higher, or from trending higher to trending lower. There is always a range in between. Now, the trend to the upside has ended here. Is this market going to give us a range here? Is it going to trend to the downside? Nobody knows that. Right? But there's change. Something has changed. The trend to the upside has ended in the bigger time frame. Right now, we still have about exactly 4 more days to go before the end of the month. And the market is kind of like battling. This is fighting to get back inside previous month range. And that's not that relevant. But I can highlight from this is this high that has no excess here. Can you see pretty much exactly like this March high? And the trend is over. No? We may have a range here. The weekly time frame has come back, has fallen back inside this 4-week range. You have a significant break here. This high here in the monthly is this high, what I have in market here. Now there's no gap actually. It's just these are TOS charts. When TOS make these continuous charts, they overlap one contract over another one, and that's why it creates this gap. But there's no gap here. You can see here there's no gap, and it has a range. But that is kind of, this high could be something relevant, because if the market re-enters, takes this low or this level and comes back inside the range, this whole range becomes, the opposite side of this range becomes the potential destination trade there. It's going to happen? I don't know. Nobody knows that. But something else that can happen, the market can re-enter this range, and then price can be rejected and actually come back all the way up to here. Now there's balance. The market is back in this 4-day range here. The trend is to the downside in the weekly. Can you see? You got 1, 2, 3, 4 weeks to the downside. Potentially inside bar. Look at this inside bar where all this trade happened. This inside bar is kind of like too much, too big for what I prefer. It's too big to me. This one is better. Those I'm talking about technical observations here. Right? This market can give us another range, another week within this range, and then after that, the market come back higher or come break to the downside. What's going to be, nobody knows. The daily time frame, notice how the deeper you look, you start to see significant weakness here. This high is exactly the 100. It was bought once from the 100 moving average, twice from the 100 moving average. The current contract doesn't have too much left. After this week, I believe we have two more weeks to go. The last week is always some rollover that goes on. It's really hard to trade during that one. But notice how weak this low is. This high is questionable. This is what I can take from this chart. This is the market has found. Was looking for an area, a place where two-way trade can take place. It seems like finally has found that place. This area could be, we have a range here, a new range, 1, 2, 3, 4, 5, 6, 7, 8 days range, which high is questionable, and the low is questionable as well. There is nothing clear here. That being said, the weakness of this structure is quite visible. The structure of the market is very weak. There are multiple gaps here, gap here, gap here, gap here. Mechanical. Notice how these lows are all together. 1, 2, 3, 4 lows here. Multiplies both from the 50 moving average. A very mechanical way of trading that happened here. All right. The trend has been established to the downside. What's going to happen next week or tomorrow? As long as the market doesn't take this high, the trend is to the downside. But keep in mind that this is a range. Okay. Keep in mind now that we may have a range. It could be this. Could be this. That can be the edges of the range. Now this high, it's a little bit high here. And let's make this a little bit, okay. The market has been bought exactly from the breakout level from this range here. It's very questionable. The low is super questionable. Okay, I'm not saying the market is going to break, but the structure that's holding this market is very weak. Now let's check. Let's check the market profiles. Okay, so far, trends to the downside, bigger trends, intermediate trend to the downside, change in the monthly, in the bigger, and the daily time frame in range. All time frames are trading different. And this, what do you have here? The market profiles. This market was going from, there was super long here. And in the last couple of weeks, 2-3 weeks, the market was in liquidation mode. The selling was really nice. It was tremendous amount of distance that the market covered, and the bigs didn't move. a bit. It was around 14, 14, something like that. It all started to change here. But the way how this day happened is was very questionable because it has left some very, very questionable. Notice how wide is this high and where this high is. Notice how this POC is very wide, and this looks like long liquidation here. This is long liquidation, short covering, long liquidation here. Very questionable high. This is Nvidia here. Liquidation, market got too short and then a rally. Sometimes markets get too short, it cannot go further. It cannot break more because the inventory is just too short. Traders get so nervous that they just can't short anymore, can't move the market. The market has to rally to remove the weak shorts so new traders come and take their positions. But what I question from all this movement that happened here is the volume. Look at the volume, especially what happened on Friday. The very low. It's a remarkable low how the volume was here today. And after Nvidia, we have a gigantic short covering shape profile in the overnight. Significant amount of volume here. I got this blue market as a significant amount of volume at this level, at these levels. 815 on A here. That level I wasn't taken. The next day it sold from that level, and Thursday did the same. Now this is kind of like a technical view. Try to understand, not try to make too much sense of this. These are not levels to buy or sell. These are levels where to observe the market, how the market reacts. I have to admit, I was caught here. I was so mesmerized with price that I completely forgot about what happened here this day. When the market came back up to here this day, I thought, okay, good odds the market is going to take these ones. Is going to squeeze the shorts from this one because there's still a lot of stops. What happened this day, it added more stops on top of this one, but this volume is still, there is a lot of stops. I was counting, and this is when trading becomes really dangerous. When you have a bias, because I admit I had a bias here today. All the information the market gave to me was telling me overnight super low, overnight profile. Let me show you here how that overnight profile look. That's a typical short covering. This is the Lupo P, and this is the P short covering. And the next day just liquidated all that. All this inventory was liquidated. The fact this just took a couple ticks, couple hundreds from this level that was sold from Halbach, and that this market was exactly a POC. I was just so focused on those levels that I disregard all the other market generated information that I have. And sometimes that happens. And when it happens, we have to act. At least I try to acknowledge and rescue what I did wrong, what should I have done instead of what I did. Because otherwise, we're going to repeat the problem. I started to short this market somewhere. I don't remember where, but there were some levels, I guess, when market took this low here, or when when it closed these distributions. But I was wrong, right? I was wrong. I was not too early. I was just wrong. And the thing with trading is that we have to adapt to the market. The market doesn't know what I'm thinking. The market doesn't know. Okay, this is tremendous amount of stops here. I'm going to squeeze. The market doesn't care about that. They may be. There is still potential here. This high is very questionable. It's is 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 it's very questionable. That's why I call it weak. And I think it's worth to name here what happened coming from overnight POC, coming from exactly how back. This movement is very questionable. It can be retraced. Okay, it just needs um, the right trigger. Something may happen, and we may have a rally. And what happened in this day as well? They didn't have too much volume. The previous day had, this day has way more volume than this. This was just long liquidation. And the fact that I didn't see volume here, also, okay, this is not just, okay, what is happening here is not something powerful. Okay? So I took too much time to realize, while that can be true, while you can be right, while I can be right, okay, this is not something significant. Okay, the correction does not necessarily happen, or the correction is not made the very same day. Okay, what happened after or the next day has a lot to do with what happened this day, because after this long liquidation that we had here, the next day, in Friday, you could see this accumulation here. Laggards coming exactly from half back here. All of this short inventory was clear with B. Okay? B, or during B, we also have Chairman Powell speaking. The buying was very mechanical. I guess the buying was coming from exactly half back here, very mechanical. But it removed these shorts here, the laggards from the previous day, didn't close this distribution, and then broke. When this inventory was removed, the market got very short. You can see how thin this market is. The trade wasn't here, but the trade was down here. Okay, but you can see how much distance you have from up here, very mechanical high, all the way down to here. How many distributions you have? You have 1, 2, 3, 4, 5 distributions. Okay, and the overnight inventory was actually what happened here. This is very illustrative. This inventory was long, 100% long, relative to this day. This rally tried to follow the direction of the overnight, clear, and then you have a later. But notice how weak, right? How low volume this day has. It has nothing. One of the lowest days ever. And you can see here, this is the last 10 days, the lowest in the last 10 days. What do we have for the next week? What do we have for the current week? Okay, we have consumer confidence on Tuesday. You have GDP on Wednesday. You have employment situation on Friday, non-farm payrolls, PMI, and also PCE on Friday. Non-farm payroll, where's PCE? Oh, Thursday. Okay, there's a lot of things that are going on. Friday, Thursday, Wednesday, and Tuesday. Earnings are irrelevant. There's no more earnings, no more. There's always earnings, but not big companies or that can affect the market. Now the trading, the market can focus on stocks. Pretty much can be focused on stocks now. What the market does with stocks. The curious thing here is that this high, we have a gap here. We have a high that was made in the overnight, which is kind of questionable too. It's not a good high. I don't think this is the high. The market has a high yet. It has good also had I mean, coming back up here is in the odds. I'm not saying it's going to do it now or going to do it no, during next week. I believe that this level is very relevant, July low as well. There is something that I have noticed in the intraday is the high volume that we have during, not volume, the nicey volume, but in the intraday, there was a lot of prints here. Let me show you what I mean with this. Okay, over 1,000. It coincided with the accumulation of volume in the histograms and the trade. That's remarkable. That's remarkable for me. I'm not saying that the market is going to keep going higher, but I think if the market has finally a place where two-way trade can take place, when we see some accumulation, some range, long liquidation, short covering, long liquidation, short covering here, around the 4,400 maybe, because I think that that level didn't have relevance at all, but the market is trading back and forth through this level quite some numerous times now, multiple times. If the market somehow comes back to this high, this high here. This high here is exponentially, okay? This high is exponentially weak. This area here, if the market comes back to this area and is rejected from this area, it may test the lows. Because the low is also questionable low. This low doesn't have that. It does have excess. Technically, it has good excess. It is not particularly good. I call it weak because it's exactly at the 100 moving average. This one also was bought at the 100 moving average. So the two lows that we have in this range are weak, and the only high that this range have, this 8-day range high, is absolutely weak as well. If the market comes back through these levels here, the one that has high volume, I would pay special attention to this area below the 4,000, because if there is value, it's been accumulated here below the 4,000. It shows some acceptance of lower prices. We might have a rally after that, and then coming back to take these lows. This high is questionable, the low is questionable. There's nothing clear that I can see here in this market. I would advise some cautions when trading. We also were talking this day here. Let me open this profile again. It is in nobody's interest to kill the market the way it was killed this day. Also, if you join these 2 days, you will see that you just can't imagine. This is long liquidation. Can I see how the bottom side is white and the market goes back up, high, up, down, up, down, up, down, up, down. The value POC is lower, but this is I don't like this kind, because this one this could be some kind. This could be useful for illustrative purposes only, but it does have in consideration the overnight TPOs here as well. And unfortunately, window trader doesn't join these profiles by the regular trading hours only. It includes the day, the whole day. This rally that we have here was very questionable. Every single low was weak, questionable. 3 or 4 were bad. All that, or most of that, has been corrected with the break. With this break. And now you can see you got the high range here, low the range here, where the market is right now. It's right at the center. Can you see? Right at the center. What I would monitor is where value starts to build. Above the 4,000, below the 4,000. Where value starts to build. In the upper side, this is super. I think this level here, the 44, I would call it. I would call this area between the 60, 44, 65, and 44, 70 of particular interest. If the market takes this one out, there could be some short cover, some really vicious short covering here, right? Because the market has removed the weak loans. All of the loans, the weak loans from this rally are out. Okay, but the bigger picture, okay, remember the bigger picture, how the market was very short, right? The market was very short, and some of this short inventory has to be removed if the market wants to go lower. So that's the other thing to keep in mind as well. We may have some volatility here, market going higher, lower, higher, lower. Then it doesn't have, if you look too close, you won't see a clear direction. But this is telling me something. Monthly is going to the downside, weekly is going to the downside. Some rebalancing can happen here. The odds that having 2 or 3 week range here are possible. And this could be some back and forth here. Some back and forth. No clear decision. And that won't be weird. Okay. Another thing that a lot of games I played on the markets, all of this inventory now. The market, this contract, the September contract, it's right here, right with it open. Nothing happened. You have bought a contract 3 months ago. The price will be the same, basically the same. Nothing has happened in all this. Can you picture that? After all this movement that we have, market going higher, lower, higher, lower, higher, lower, what happened with the September contract? It went nowhere. The market has gone nowhere. Just imagine that. Yeah, that's one piece of information, one piece of information that we need to get also from all this movement. The other thing is, the other piece of information, that this inventory is short, right? Maybe too short, and needs some rally to remove some of which has happened already, has removed some of the weak shorts here, but it just get too short again right away. In less than a day or 2 days, the market get completely short again. Okay. I would try to remain as neutral as possible. We have a lot of information that's coming. We have, as we saw, we have PCE, non-farm payroll, GDP, and employment, consumer sentiment. I think the market is going to be focused on stocks now. Now, another thing that we do have here that is also worth to keep in mind is what is happening with the bond market. The bond market moves the opposite way as interest rates, right? The treasuries, when treasuries go higher, bonds go lower. And this law, I just can unsee this. Look at what the 10 years is doing here. You can see a clear trend to the downside here. It has, and it's being bought from this exactly. Same thing is happening in the 30. All right, but it looks like the thing is going to show you, or is showing the direction of the market. Just pay attention. I'll keep an eye on this, on what's happening in this market. The market was going. Look at this. What happened here, right? It was breaking here. Look at this vicious, really vicious wide short covering here. This is short covering here, short covering rally. This is the stem of the P, and this is the loop of the P. And what short covering does? Short covering weakens the market. It happens everywhere. Market understanding. Once you have some understanding of the market dynamics you can apply to every market. And some markets are going to be more efficient than others. Every market has its own nuances. Every market has its own triggers and catalytics, right? The crude oil is breaking the trend. There's a nice trend to the upside in the dollar. This is good for the market. Gold, gold should keep going lower. If this goes higher, and this goes lower, and this goes lower, and this one goes lower, that's everything. That's not a nice word, but that would be a nice setup for the ES, for the S&P 500 to the downside. I mean, there's nothing out there that tells you how to trade, but we have to monitor all these things quite often. Sometimes this is more relevant, sometimes this is more relevant, but there's a lot of talk. If you read the papers, if you watch some news, there's a lot of talk about the 10-year treasuries or the bonds as I have it here in my charts. What the other markets are doing. Let's see if we can see something from the Nasdaq, the Dow. Look at this range here. This is a nice range in Russell. The Dow also have a range. It's having downside extension. Look at this. Look at where Nasdaq has been bought. They have this range. I don't trade these markets. I think there are two things. The Nasdaq. We have this range here. The breakout that happened here, right? All the trade happens about it. There is comes back inside this support. It's coming back another time. Can you see what's happening? It's coming back another time. You make a rally and come back another time. The more times the market comes to this level, the weaker this level becomes. Okay, the more odds, or the better odds, the higher odds the market is going to have to go through this and have do some acceleration here. Okay, now if that doesn't happen, the market comes back inside. Notice that there's a range here. For example, this is a Nasdaq, right? There's a breakout here, and then breakout. This is short covering here. It is clearly this is also short covering here in ES. What do we have here? But this is from June. Let's just for the sake. Okay. I don't compare that often. Okay, but there's short covering here, short covering here. All these are being trading in sync. The market took this range out. It's buying from the lower range. Nasdaq has come back inside this range. This has more also coming on trading lower. Look at it. Wow, come on, look at this. The whole market. That's why, and this is why I prefer the ES over other markets. Although this has more liquidity here. This index is made by 500 companies. This one with 100. This is 30. This is 30. I don't know. The Russell. This is small cap companies. And the Dow also is being bought from this breakout. This is too far back here. This one actually has gone lower now. Look at the Dow, for example. Huh? Look at the Dow. This is the breakout. The market, the Dow is building value inside or below this level. This hasn't happened yet on the ES nor the Nasdaq. Will it happen? Don't know. And the risk here, I guess I'm going to change this. I'm going to change the Russell here. The risk in the Russell, if you trade the Russell, is that once the market comes back inside this range, there is just too much trading here. It can come all the way down to here. The Dow has almost already reached the opposite side. And notice what do you have below these levels here? Firecracker potential here, and there you have nothing here. So if the market comes back down to here, it can risk going all the way down to here. That's how you do how you do your quote unquote technical analysis, right? But those are just, I do this just to check uh, these other markets, because sometimes you can see something that is quite obvious that is happening in one market relative to the other one, and you can see some divergence there. Oh, okay, there's something here, right? But what I can see here is all of them are doing the same. There's nothing here to see. And the other thing is, if I can see it, you can see it, and everybody can see it. When everybody can see something, it actually doesn't have any value, because everybody can see it, right? If I am the first one to see it, and I know nobody else can see it or can see it yet, that's when it may have some value. But if I can see it, everybody can. Okay. I don't have, as I guess, the conclusion, or to close the stream. I would remain as neutral as possible and go with the market generated information, or the information that the market gives me. Try to get rid of any bias. Notice how Friday, for example, even though it has really low volume, we have checked that it has a really low volume. Okay? Notice how it doesn't have any kind of references in the lower side that are weak. That it wasn't bought from Halbach, it wasn't bought from any previous low. There was a lot of selling that was coming from the 4,000 here on Friday. That's a sign also. Who is doing the selling, for example? But the buying side didn't have that. It was completely different on Friday. Okay. Try to get rid of biases. I see this market, as I say, it's a tale of two markets here. There is a big fight here, and the traders that see the trend to the downside are trying to keep selling the market, and bigger trading money, not investment, but trading money. Trading money not necessarily is weak money, because there are these companies, these trading offices that trade actually billions, right? They can move the markets. There's a constant fight between them and small trading. I would be very cautious also about the China situation, the downgrade of the banks. Again, this is another company. This is a second downgrade that the banks are having. It is kind of a particular weak spot right now. Okay, but sometimes these markets need something. Something is what triggers the selling or triggers the buying. Thought there was going to be something with Chairman Powell's speech in Jackson to close the Jackson Hole meeting, but nothing happened. Nothing happened there. So I guess the market is going to be focused on stocks now, in the next couple of weeks. All right. I hope you. And also, always check. Right. Always do your homework. Try to do your market recap, your own market update, so you can have your own opinion, and check. Once you do that, check Jim Dalton's. I guess it is here. Oops, this is not. This is, you know. I still haven't watched James Dalton week ahead episode. This is very useful, very important to me. I use this to compare. I use him. I have Jim Dalton as my benchmark, and I try to see. I evaluate. If I'm going to evaluate my analysis, I do my own job and then watch his to see what he's seeing. Is there something that I miss? Is there something that he hasn't seen? Are we having different views? Are we in the same kind of view? And because he has a lot of experience, over 50 years in trading, and also has information because he cleared traders in the CBO exchange. The Chicago Mercantile Exchange also have a trading company once. He knows. He has a particular view or opinion of bigger time frame traders, which is very, very, very useful. Actually, you don't find that kind of people quite often, right? And there are a lot of people, I suppose, but the fact that you can actually see them or hear them, you don't hear that. What you will hear is in CNBC or any news outlets or newspaper, somebody big coming to say some things because they usually have some interest behind, because they are also investors. Okay, I hope it helps. I'm going to watch this as soon as I'm done with the stream, and I wish you guys a really good trading week. Stay safe. See you.